What's up, guys? Thanks for checking out the video. It's been a little while since the last video. We've still been really busy putting together this material in the background. There's over 40 videos that we're producing in the background, and they take a lot of time and effort to produce those videos. But once that's all done, I'm hoping to be a lot more active, posting a lot more videos on this channel. And I really wanted to get a video out this week just showing you a couple of sessions in the live room. The last video I put out has had over 7,000 views in the last month. So you guys seem to like these type of videos, the longer videos showing the analysis in the room, and really get a feel for what we do every day in the live room. So I want to follow suit and keep doing what's working, and do me a favor as well, share this video amongst your friends, click like and subscribe to the channel if you're not already, and just like and share the video, and also leave a comment below, because that helps YouTube optimize the video and get it out to as many people as possible. So this video is just during the London live room today, this week, sorry, and just going over the pairs, the analysis through most of the pairs. I didn't want to make the video too long, but we go over most of the pairs, and you get to see the analysis on each of the pairs. This week the markets have been moving sideways, which means consolidation patterns. For all you consolidation pattern formation traders, you really took advantage of that this week. We had a couple of ciphers, one on the Aussie dollar and one on the pound dollar on Tuesday, or Wednesday, and then just as the room opened, those trades got filled. We hit two targets. And then the next day we had another two ciphers on the same pairs, and they also hit targets. So we went from a bit of a drawdown to a very profitable week, and we had a Gartley later on in the week as well on the pound dollar that was very profitable, which stuck us around 250 pips in the green for the week. So we go over that, and we also go over a euro-yen trade on the daily time frame. So down on the 5-minute chart, there was a day trade setting up, trend continuation trade, just to show you guys that we really do go down into those lower time frames and pick out those structure-based trades, those trend continuation trading opportunities on the 5-minute. So there's something for everyone. And we also look at counter trend trades, trend continuation trades, and obviously consolidation trades. So something for everyone in the London live room, and it gives you a real good opportunity to see exactly what we do in there every day. And lastly, there's something at the end on the euro yen, something to pay attention to on the open. So keep a lookout for that later, and sit back, enjoy the analysis, and I'll talk to you soon. Good. The sun's back out. It's come back to see us. So people rolling in the room. So just so you're aware, yesterday we had a cipher formation on the Aussie dollar which hit two targets, and we also had a cipher pattern on the pound dollar which hit two targets. So I think I'm up about 30 pips for the week now, because we took the big loss on the dollar yen. Took an 84 pip loss on the dollar yen, but I also had the 17 pips from the Aussie CAD cipher on Tuesday morning. Okay, and then we had these two yesterday, which totaled, we got 17 pips on target 1 on the Aussie dollar, 30 pips to target 2, and then on pound dollar we got 18 pips to target 1 and 38 pips to target 2. So we're I'm up about 30 pips for the week, which is better than being at a loss, right? So just stick to the plan, and you get through it. Don't stop trading when you start to take losses. So I'm just going to get my orders in on this day trade here on the pound dollar. I'm just going to adjusted the targets already, so I'm going to get 1 pip below
Order
there,
pending.
382 at 44.
4.41 and 1 pip below the 618 at 4.459.
Order pending.
So take 2 targets in this room. Anyone that's new. Quite a busy day in here yesterday. Today looks like it's there's a bit going on. We just opened the room into 2 trades as well, so quite a little bit to watch this morning already. But we're going to go through the same pairs, same analysis, go through the pairs anyway. Still sideways movements on these markets, nothing really happening, it's pretty dead. But we are getting these consolidation patterns on the lower time frames particularly, just because we're moving sideways. So you guys who trade these sort of patterns understand that in consolidation, well, that's where we find these patterns, right? Because they're just a combination of retracements, Fibonacci retracements and extensions, and that's what happens during these sideways bouncing movements in the market. Aussie CAD then, right? Consolidation yesterday, still didn't move. We've seen some bearish movement this morning. We are holding this level here at 94.50, which we identified earlier on the week on Tuesday, I think it was. We've said we want to pay attention to this level here. Market came down, respected it, held again, and now depending on the close of this candle, if we can close below this level here, this low here, there's a good chance we're going to see further bearish continuation down to at least 93.20s. Okay, 93.25 down here, 93.26. Because that's the next level of support. Simple, right? So there's some decent, there's some room for decent profits in here. The question is, how can we get involved? We know that market's likely to either go straight down or we get a little pullback up into this structure level and then we can look to ride it down. So the IPDE process, okay, identify the market's bearish, predict where it's likely to go, okay, and how it's likely to get there, and then decide how we can get involved. So what we'll be looking for, you can see we've had this lower low lower close here on the 240, right, and we know this 94.50 level is a major level of structure, okay, based on the higher time frames. So what do you think that I'll be looking for on this pair? Pull back into 94.50, retest and short. Yeah. If we can pull back, this move hasn't finished yet, but if we can get a pullback up into this area here, because this is a very high, strong level of structure on the higher time frame, there's a good chance that this will provide some decent resistance. Right? Is anyone else looking at anything on this pair? Counter trend on the lower time frames. Okay, we're coming down to this previous structure. Support. Right? ABCD. Let's bring on some fibs. Build out that CTS. 1618 in that zone as well. Let's just make sure that this is just tip the 382 there. So ABCD formation 1618. Let's see if I don't think we're going to get a Fibonacci inversion. Nope. Okay, RSI going oversold. You might be looking to jump on a little counter trend move down at this zone here. I can't get involved in anything, but you might be waiting for that little double bottom. For that, you might go down to the lower time frame, wait for price action to get down to this level, look for that double bottom down at this area here, and then look to ride this up to get some targets out of this counter trend move. Again, 382 lining up with this previous structure support level. Not a bad area for target ones. So any counter trend traders looking at that, then like to go through sort of options for everyone, because I know there's counter trend traders in here as well and trend continuation traders, so we like to just give options to everyone. Consolidation, and also part of my analysis is to try and build out kill zones to think like as many traders as possible as well. So I typically do go through different scenarios, but that's what I'm in, guys. Any questions on this pair? Okay, so time is 1:45, so let's get off of this and go over to pound dollar next. Where's pound dollar gone? Here we are. So pound dollar, we're also in this trade, and we've also, let's just bring on our fibs here. We've also had to adjust targets on this one as well. So this is a day trade. I take 1 pip on the 15-minute chart, so there's me adjusting my orders. Okay, so let's do the multi-time frame analysis. Let's go out to the daily on this pair. Clear this off. Any questions before I get onto this pair? Okay, so looking at the pound dollar, another trade, another winning trade yesterday. 2 targets on this, 18 pips to target 1, 38 pips to target 2. That was also a Cypher. More consolidation. Look. Sideways movement. We're not violating the highs or the lows of the previous day. Just moving sideways. Like a worm. Okay. But looking at the bigger picture, we have actually violated this high and break and closed above this high. Okay, and we've pulled down into previous structure resistance. Okay, resistance, breakout, come down, becomes support. So I'm predicting a retest of these highs. Question is, how do we get involved? So if we drop down to the 240 chart. Now this Cypher pattern's still valid here, which I would like to get involved with, but we haven't pushed down and met my entry yet, because I can't enter this conventionally, because the stop loss is too big a risk, over 100 pips of risk. If I entered at the 786, which many of you would have entered this now, and you're probably in this if you do trade off the 4 hour, but my stop loss would need to be below this X leg, which means, I need to be 4 pips. I front run my orders by 4 pips, so 42.50. 42.50. So I know that the minimum place I can enter is 43.46. Okay, so that's where I need to enter. So I need price action to push down to here, and I can take this Cypher formation at 43.46. That means I get my stop loss rules met for under 100 pips with front running them as well, and then I can get a better risk reward as well. Right. You're getting a better risk reward if you're taking conventional targets. 382. Okay. And at the 618. So if you're taking conventional targets, you're looking at potential profits of, let's bring on the ruler here. If you enter here and targets are hit, then you got 163 pips to target 1 and approximately 262 pips to target 2. So very profitable trade. 162 pips to target 1 with only 96 pips on the table, 100 pips on the table maximum. 163 pips to target 1, 262 to target 2. So very, very good risk reward trade. If you just let price action come to you to meet your maximum stop loss rules, you're going to get a much better entry and a much better reward to risk. So that's how I play this. That's how I play this, and we've been looking for this for a while. And not only that, it will come down and meet previous structure support, which is going to give you a decent structure-based trade anyway. If you can get down to previous structure support in this area here, if you can get down to previous support at this level here, that's going to give you a decent structure-based trend continuation trade anyway, right? So, good area. This is the area I'm looking at. This is the area I'm looking at in here. And I'll be looking to get involved at this level. Now, if market just pushes straight up, well then, you might be looking at a counter trend move up at this level here, up at this level here. Okay, but at the moment we're just moving sideways, nothing happening much at all. If we go onto the 60, you're going to see we're just moving sideways. See this, right? This is the cipher that we're in. Okay, this is the cipher that we're in, consolidation. But yesterday we had another cipher here. X to A to B, B to C, and then a CD completion down here, and we got involved, hit 2 targets as well. So 2 ciphers, two target winners. Very nice. And now we're in another cipher. Let's just see if we're near target 1. Hopefully we can hit target 1s on this. Roll stops to break even. Then we'll be in a risk-free trade. So euro dollar on the daily. Euro dollar then. Higher close candle yesterday. Okay. If you trade off the dailies, that might have been your reason for entry, and you might be looking for a retest to the highs. Higher close candle. Right. Stops below here, looking for a retest maybe. I don't trade off of the dailies, but that is what we mean when we say higher close candle. This candle here, this green candle here, right, closed here, which was higher than the high of this candle. Does that make sense? Very simply put. It's like a light bulb moment for a lot of people. It's like, tsh. Okay, so that's a higher close candle. I know most of you guys know that. I do get a few questions, which is good. So that's what we mean by higher close candle. Looking at euro dollar, we've pushed down into this previous structure consolidation level, resistance, okay, consolidation in here, resistance again, should provide some decent support, which it looks like we have. We've had a higher close candle. Well, let's drop down to the lower time frames and see if there's any way we can get involved. We were just moving sideways. We did see some bullish reaction here. We was looking at this area. This was the 618. We pulled down into the 618, and we was eyeballing this area here. Couldn't get an entry reason. There was no double bottom or anything. I couldn't get stops below structure, so I wasn't comfortable buying this market up at this level, purely because there was no protection for stops on any time frame. As we dropped down, I was looking at, the 60-minute chart. Right, I was waiting for RSI to go oversold. We didn't. Double bottom, we didn't. Okay, so there was nothing. We just moved sideways, and you can see it was just like a bit of a, this is not tradable. This is not tradable for me. And one other thing I was paying attention to is this spike up here. Came up, held this level, which happened to be this little wedge breakout, structure support resistance level as well. We broke down, came up, respected that level, so I wasn't too comfortable buying this up anyway, purely because of how market reacted here. Now, I'm just waiting to see what happens here. If we can put in a lower close and violate this low down here, let's get rid of that. If we can violate this low down here, okay, then I can look for a pullback and look to get short. Okay, but for now, I'm not I'm not comfortable getting long or short. We're just in no man's land here. Okay, on the higher time frame, I'm predicting a retest of these highs, but we'll have to see what happens. At the moment, we're just moving sideways. Moving sideways. Nothing I can trade other than consolidation patterns in this consolidation area. And, you know, lots of you guys have witnessed over the last few days or the last week that that's what's happening at the moment. The markets are very dead. They're dead. They're slow. They're moving sideways. And what that means is if you trade consolidation patterns, well, then that's where they form. Right, so that's why we're seeing so many. Let's bring on our Fibonacci retracement tool. So we've gone up into a 618. We haven't quite come down for the C leg into a 618 yet. But if we do, then there's a potential Gartley formation up here at the 127 extension. So you'll be looking at the X leg up here at this spike. X to A to B, B to C if we can push down. And then a D completion up here at 114.71. So potential Gartley up there if we, you know, it's a way away yet, but we're just predicting what may happen, keeping ahead of the markets. If we continue to move sideways, watch out for that. Okay, or if we break and close below here, well, then we can start to look for reasons to get short. Let's bring on the Euro Yen. Consolidation. Yesterday we have put in this, you know, this higher close up here. Then we consolidated yesterday. Consolidation today as well. We were bearish and we're looking at that 120 even handle number. I think we're just a bit above it, aren't we? About 120, a bit below it. Sorry, 119 something. But we said 120 because that's that even handle number. And as we go down to the lower time frames, we did put in a low close, only by a couple of pips. But what we saw here was this little double bottom. Okay, followed by a violation of this retracement, and then a pullback and a triple test. There's actually a 2618 in here as well, but we put in a triple test. And then we've put in a new high. Okay, so if you're looking to get long after this trend reversal pattern down here, you might be looking at areas where you can get long. Now, the first area we was paying attention to yesterday, as we built out our kill zone, was this 123.50 level. This 123.50 level, and the reason for that is because if you look out on this higher time frame, you can see we had support. We held this level here, resistance. Okay, there's resistance in here. Even on this big bearish momentum candle, this is what I like the look of. Look, we had this big bearish momentum candle, dropped, what was this, 400 pips or something? 400 pips, and then bang, look where we held. Closed at that 123.50 level. Then we broke down, we came up again, bang. Hit that, this long high test wick, look, news related high test wick, held that level. We came down, we came up, had a doji candle in here, okay, decent level for potential support. So if we could test this level, this would have been the area I was eyeing up to get long, right? And as we drop down to the 60, this area in here, we had this nice little structure level here to get stops under. This little outside return here, and I was looking at this zone in here. That would have given me more than a 1-to-1 on my risk reward. I think we also had a little harmonic move down there as well. So it was a harmonic move completing in that area. And this was the area I was looking at. As you can see, we came down, tested this level of previous resistance, found support again, and now we've tested the highs. So that move has already been made. Okay, so when I talk about, this is a good example of when I talk about when I'm looking for that trend continuation move. Well, because this has already been tested and this move has already been made, now all I'll look at is consolidation patterns in this zone until we break out. Does that make sense? So now we are channeling. Now we're channeling. I'm not interested. All I can trade in here is consolidation patterns. Gartley's, bats, Cyphers. And if we break out, then I can look for that pullback and look to get long. Does that make sense? Because the retest has already happened. Hopefully that makes sense. Yeah. Okay, so now we're channeling. You breakout traders are probably looking at this, waiting for that third test or something like that. If we can get a third test down here, then that would be a good opportunity to get long down at this level. I don't trade breakout patterns or anything like that, so I'll have to just wait and see if I can get presented with a trading opportunity. And as we go down to the lower time frames, we get this consolidation area, and this is where we can see this bat formation. 123.78. Constellation's thrown this up here. Bat formation, check your ratios. 123.78 if market pushes down, which will mean we can get our stops below X, which is going to be a great place to get stops. Okay. Below previous structure. Initial targets. 382. At 124.05 and the 618 at 124.22. You can see the bat, sorry, bit better here. So there's a potential Gartley on the 5 minute, a little Gartley here. Setting up X to A to B, B to C, C D completion. Okay, depending on how much profit we can get out of this. Yeah, so there's a little bit of profit in here. Okay, so a couple of trades setting up there. Time. So be mindful of that. Aussie dollar, we still haven't. Oh, look at that. 1 pip to target ones. Hopefully we can hit target ones on this and roll stops to break even. That'll be nice. So we're in that Cypher. Pound dollar Cypher we were in on the day trade. Already in this, hit target one for 20 pips. Rolled stops to break even. We're just in a risk-free trade now. Euro yen. Right. We've actually broken and violated this retracement. And we put in a new high. Now I'm predicting that we're going to test this level up here. Okay. Test this level up here. Don't know that that's going to happen, but that's the prediction. Okay. That's the prediction. And if we bring on our Fibonacci retracement, we can see that we are pulling back down. And if we pull back down into the 618, that'll give you that 2618 trading setup there. Okay. So anyone that trades 2618s, you might look for a retest of this structure level here for target ones. Okay, and then you might be looking for a retest of this structure level here for target twos. So I'm not looking at anything on this, guys. Nothing. Right, guys. Yeah, sorry, I was just oblivious there. Just working through the lower time frame. Potential trend continuation trade down here on the 5 minute. If you're trading these 5 minute time frames, again, this little consolidation wedge here, breakdown, harmonic move up to previous structure. Got a 382 retracement as well. This would be a decent area for trend continuation move on the lower time frames. Now, if you can get up to this level, we can bring on a Fibonacci extension. You get a 1618 up there as well. So we get a 1618, 382, ABCD harmonic equal measured move. Previous structure looking left. Okay, which is also support, 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 right? Breakdown as we push up to this level should provide a good level of resistance. Okay, stops above previous highs. And you might look for that lower low, lower close candle at this level. I would look for RSI to go overbought at this area here, lower low, lower close candle, and then look to take targets at. If you split your targets, you might use this structure level in here for target 1, target 2. Personally, I would use a retest of this low for target 1s. And whatever your stop loss rule is above previous structure. See what the ATR is. 7, so say 10 pips above this high. So a little trend continuation trading opportunity there on the lower time frame. Alright guys, so just to update you on this, what we were looking at in the London Live room this morning, as we did actually push up to, on the Euro Yen on the 5 minute chart, as we did push up to this structure level looking left, we predicted that we'd see a reaction at this level. You can see we came up, ATR stop above the high, and you guys that took this would have seen some decent profit. Retested the low. You can see that we've tested these lows down here, depending on if you was front running your orders. But the prediction was correct. So if you got involved with this, well done, and hopefully you made some decent profits out of this little day trade as well. So alright guys, I just thought I'd bring this to your attention. So just to look out for on the open, during the week you saw in the video that we was going through the 2618 setup on the Euro Yen. We can see that we've pushed down into that 618 area now. So you 2618 traders might be looking to jump on at this level. So something to pay attention to on the open, and good luck in your trading this week, and I'll talk to you soon.